Hey traders, Ryan from blockstocks.com. Here's a video on taking a live trade and watching over the shoulder as I evaluate the platform's features, checking the trade on the thinkorswim charting platform, evaluating the options chain, and then taking a trade. The market opened today about 30 minutes ago Eastern Time. And just a reminder, do not take these trades because you will be too late. This is not trader financial advice. I'm just showing you some information that might help you. And we've got here this pulled up on unusual volume. We've got big tickers for Tesla. And then we have this one IONQ pop up. And then we can see here on the real-time option flow that we're seeing a number of orders coming in here. Now they're coming in as sweeps, which means that some kind of institution is trying to buy all of the $15 strikes for the best price. And so what we want to do is take a little bit further look into what's happening there. So I'm going to click here on the IONQ, and it's going to bring up our ticker research. Now here's the ticker research on IONQ, and currently trading at $12.71. The strike prices that they're buying are $15, and we have dark pool orders of about $11 million. So someone knows something there. What we want to do is look at the same expiration and the same strike. Now what this means is this is out of the money strike by 21%. Now that means that institutional money believes that this particular ticker is going to go from $12 to around $15 on or before November 19th. So let's look at the chart. I'm going to change this now to IONQ. And let's look at the chart. Now this is an interesting setup in the short term as well as the long term. Now here's the daily, and we're seeing some upward movement here. And then on the short term, we have a very nice setup forming here on the technical analysis. We've got a 5-minute squeeze firing to the upside. We have this already aimed fire indicator indicating seller exhaustion, meaning that down here in this range, we're getting sellers, sellers, sellers. Then all of a sudden you run out of people that want to sell at this level. So then what they want to do is they're going to buy to close short positions. And then on top of that, you're getting dip buyers. So you get a doubling up of buying pressure at this level indicated by this ready aim fire indicator. And then we have just confirmation of upward sentiment with the MACD crossing to the upside. These little green circles are as another custom indicator from simplertrading.com. I'll include a link below if you want to check it out. If you happen to purchase from my link, you will get a discount on their options trading and off of some of their indicators. And what the circle means is that the squeeze, this consolidation squeeze, is about to fire. And indeed it did fire today. Now let's look at where $15 lies. It actually lies way up here. Let's do a quick Fibonacci to see if that lines up with some kind of resistance level. So what you do is you're going to go from a high to a low on the Fibonacci retracement. So we'll go from this high here to this low here. There. And $15 lies kind of in the middle of these two resistance levels. So what we may want to do is wait for this to hit about 14.4 and start to either scale out or close your position. I'm not sure that I would wait till it hits 15 because there's a chance that it does not hit 15. Now let's look at our options chain to get more information on this trade. I already entered a position because I was trading this squeeze right here that fired. Typically when a squeeze fires, it's going to go up about 8 or 9 upward momentum histogram bars, or 8 or 9 on the sequence counter. Now I'm going to be releasing some training videos that explain what some of these indicators mean, but they will be part of a private trading library. So be sure to subscribe to my website, blockstocks.com, so that you'll be emailed access to that private trading library. Let's go back to the options chain and have a look at what's happening here. I'm going to close this just for now so that we can look at the put-call ratio. The put-call ratio is a measure of sentiment, and you can see here that the puts are very low at less than 1. In fact, here's a number here where there's only 281 puts compared to over 3,000 calls. So this confirms that the sentiment is bullish on this ticker. Another thing we want to do is check what our upward trading range would be. So the way you do that is you take the current market price of 12.86 and you add in the implied volatility here for this particular option that market makers are pricing into these options. And on top of that, you'll also have to add in this market maker move of 2.11. A market maker move doesn't always appear, but it does occur when market makers believe that there's a sudden burst of momentum possible because of some sort of recent catalyst. So let's bring over our calculator and try to find what the upward trading range would be according to the market makers. The current market price is 12.88, 0.87 changed, plus 3.407, 3.407, plus 2.176. And we're getting an upper trading range of $18. Let's look at where that lies in our trading range here. It lies way up above these two levels of resistance. So I'm not personally convinced that it's going to trade all the way up there. To me, I'm thinking that it's going to hit some kind of resistance here and maybe pull back a little. And if it still has upward momentum in the long run here, that you could feasibly hold on to this trade a little bit longer. But just be sure to be watching out for those daily resistance levels here, $14, $15, and $16, and then as well as that $18 mark. Those would be, to me, 3 levels of resistance that you'll have to be careful with. So you'll be wanting to watch carefully your other indicators, whichever ones you use. For me, I like to use the Squeeze Pro, the Ready Aim Fire, and the Stochastic RSI. So the Squeeze Pro is a custom indicator, but you could use the Stochastic RSI if you don't want to buy the indicators. So you would be looking to see that this is becoming overbought here. So you're looking at the short-term line coming over here and watching for this to kind of roll over. Now these other indicators that I have, the Squeeze Pro, the Ready Aim Fire, and the Sequence Counter. The Sequence Counter in Thinkorswim is free, so that's a nice free one that you can use to help time your exits and entries on your trades. Let me show you the Sequence Counter real quick. And you can see here it's counting off from the reversal of a low candle. So it starts to count when the candle closes above the high of the lowest candle. So this is the first candle that closed above the high of the lowest candle. So that's where it starts counting in the reversion. So it reversed here, 1, 2, 3, 4, 5, 6, 7, 8, 9. Now, the sequence counter will typically go up in one direction no more than 9 candles. Now, occasionally, if there is enough momentum, I've seen it go all in one direction for 13 candles. And very, very rarely can it go past that to about 15 candles. But most of the time, you're going to see this kind of 8 or 9 here. Now, most of the time, in my experience, it's at the 8th candle on whatever time frame. It could be daily, it could be hourly, it could be 5-minute. But it's usually at the 8th candle that you're getting sort of a peak here, where you're getting people that are kind of like not wanting to buy at this level because they're detecting at some kind of high. So you get some sell-off here for people scaling out of positions and selling. And then even though this one is a 9, it's sometimes a pullback. And you can see here that even as it pulls back, it restarts to count in an upward direction, depending on the overall momentum of the trade. For me, I'm looking at this trade as more of a short-term trade. The reason I'm thinking it's a short-term trade is because in the insider finance, the ticker that's being traded is the $15, meaning that they're thinking that's going to go at least to $15. So I'm not going to wait for this to go all the way up to 18. So for me, what I'm probably going to do is take a 5-minute or maybe even a 15-minute. Let's see what the 15 looks like. And not too good there. I don't have any kind of edge there. I got maybe one arrow, but there's no squeeze that fired. So to me, let's look at the 10. Again, maybe something there. If this squeeze fires to the upside, and we may very well get that if this crosses to the upside, then I can use the 10-minute to exit the trade. The longer the exit, the more likely that you're going to get an increase in price there. But you have to know, or at least have a good guess, that it's trading to the upside. So I would be looking at the 5 or 10 minute. This squeeze has already fired, so I know that's moving to the upside. And like I said here, we're going to get maybe eight upward momentum candles here. So I'm going to be watching for, counting these bars up to about 8. And if it looks like it's reversing, I'll exit the trade there. However, one thing that may stop me from exiting at the 5-minute 8th histogram bar is if the 10-minute squeeze fires. Now, if this 10-minute squeeze fires here, right here, to the upside, then I can actually hang on to the trade a little bit longer and then count off from here. It looks like typically on the 10-minute, we're looking at something like 4 or 5 histogram bars. If the 10-minute squeeze fires before I exit the 5-minute trade, I'll hang on to the trade and count off maybe 1, 2, 3, 4 upward histogram bars and then start to exit this trade. So there's 3 ways that I would exit this trade. Number 1 is if the 5-minute fired and the 10-minute squeeze has not fired, I'll exit the trade. On the 10-minute, if this does fire before I decide to exit, then I'll count off 4 upward histogram bars just based on history and then exit the trade. And then the third way I might exit this trade, if we get into this $14.4 to $15 range, if I see any hint of pullback at this level of resistance, I'm exiting this trade. Now, I only entered with 1 contract, so I don't have anything to scale out. It's either all or none. I'm going to probably exit this trade. So I'll be watching this ticker carefully. I'm going to stop the video, but I'll resume the video once I start to see this option move. Typically, options and stocks will move with a very high volume in the morning between 9:30 and about 10 or 10:30. Then we start to see a slowdown between 10:30 and about 1 or 2 o'clock. And then at the end of the trading market hours, around 3 o'clock to 4 o'clock, we're going to see a lot of volume start to pick up. Many times in that last 3 o'clock to 3:30 to 4 o'clock is when we see some heavy volume coming in. So I may have to pick up the trade later today. Hey traders, welcome back. This is looking at the IONQ ticker that I mentioned, showing up on our moonshot. Unusual volume here and sorted by unusual contract showing up right here. And I'm actually getting some movement on the trade already, and I wanted to share that with you. So we had the 5-minute squeeze fire already, and we see here on the 10-minute chart that 10-minute squeeze has indeed fired. So we're getting some upward movement not only in the price action, but as well as the implied volatility. Part of the premium is pumping up my option trade. Now I do actually have more than 1 option now. I got a total of 10 contracts. So let's look at what that's showing me. So down here, I've got the IONQ ticker up 41% right now. So that's a really good percent right there. I could probably take that position. Let me see the chart to see if this is a good place to exit. Here we are at IONQ. It's pulled back a bit. This is on a short-term 2-minute chart, but I'm seeing a pullback. So I'm going to go ahead and close this trade for 30% profit on my options. And we're out. And here are the results of the trade with a 37% profit taken on IONQ. Hope you enjoyed this video, and look out for some of my other videos where we'll go over technical analysis as well as evaluating real-time option order flow.